Here is the overview of today's gold market news. Gold price trends, technical analysis, and outlook. Geopolitical uncertainty, inflation, and the impact of interest rates on gold prices. Gold, silver, and platinum are key support and resistance levels as precious metal stabilizes. Let's have a look at the latest gold price trends, technical analysis, and outlook. Gold's price is hovering just above the critical support at $2,533.76. If it fails to hold above this level, a further decline toward $2,387.23 is possible. Gold experienced a strong upward trend through 2024, but by late October, it was at risk of a major collapse due to overbought conditions. By November 15, 2024, gold had fallen approximately 8.3% from recent highs, near to $1,800, and for 0.5% in 1 week, reaching to $1,565. This decline pushed gold into oversold territory, a condition reminiscent of October 2023. If gold's recent trend mirrors the pattern from October 2023, a potential 20% rally could take gold to around $3,000 by February 2025, aligning with predictions made by market experts. While gold has experienced a significant decline in late 2024, historical patterns, expert analysis, and macroeconomic factors suggest it could rebound, potentially reaching $3,000 by early 2025. The decline marks the steepest weekly decline in over 3 years. The drop was largely driven by rising U.S. Treasury yields, a stronger U.S. dollar, and shifts in Federal Reserve policy expectations. If gold drops below the $2,550 level, the next key support is in the $2,515 to $1,525 range. With focus at $2,533, a further decline could test these support levels. If gold falls below $2,400, it could trigger a deeper decline toward the next support level at $2,387 or the crucial support at $2,000. Resistance levels are at $2,571 and $2,631. The market outlook is bearish in the short term, with sustained dollar strength and rising yields likely to keep pressure on gold prices. However, if gold stabilizes and recovers to $2,600, it could see a rebound towards $3,000, especially if it breaks above the $2,571 resistance level. Next, let's look at the geopolitical uncertainty, inflation, and the impact of interest rates on gold prices. Gold's recent downturn is tied to bullish stock market sentiment linked to Trump's incoming administration and geopolitical tensions. Analysts highlighted Trump's history of conflict, such as trade wars and tensions with Iran. In the wake of Trump's 2016 election victory, gold initially dropped but later surged in 2017. While the situations are different as gold was already in a downtrend in 2016, while in 2024 the decline began after Trump's win, there are still expectations that gold might rally in 2025. Rising inflation, as indicated by recent U.S. Consumer Price Index data, may drive investors back to gold as a safe haven asset, reinforcing expectations for a rally in 2025. Gold is often seen as a hedge against inflation, and inflation could push more investors toward the commodity. Inflation data, with core consumer price index at 3.3%, pushed expectations for a December rate cut lower. The probability of a rate cut fell from 83% to 59%, leading traders to adjust to a potentially prolonged period of higher interest rates, which is typically negative for gold. The Federal Reserve stance on interest rates is a key factor influencing gold prices. A higher interest rate environment tends to be negative for gold, as investors seek yield elsewhere. The 10-year U.S. Treasury yield surged to 4.505%, up from 4.298%, increasing the opportunity cost of holding gold. Higher yields make non-yielding assets like gold less attractive, especially as expectations of higher interest rates persist. The rise in Treasury yields increases the opportunity cost of holding gold, as investors may prefer higher-yielding assets like bonds over gold, which does not provide interest or dividends. The U.S. dollar reached a one-year high at 107.064, bolstered by stronger-than-expected economic data, including retail sales. This made gold less appealing, particularly for international buyers, as the dollar is often seen as a safer alternative during times of economic uncertainty. Moving on, gold, silver, and platinum eyeing key support and resistance levels as precious metal stabilizes. On the overall, the precious metals market is in a phase of stabilization after recent volatility, with key levels to watch for gold, silver, and platinum that could dictate their next moves. Gold prices are mostly flat as the market stabilizes after a significant pullback caused by the strength of the US dollar. The strong dollar has been a key factor in gold's recent pullback, as it reduces gold's appeal for international buyers. Silver is experiencing fluctuations, moving between gains and losses due to a lack of strong market catalysts to drive its price in either direction. Silver remains volatile, lacking clear catalysts for either significant gains or losses, making it less predictable than gold or platinum in the short term. If silver manages to settle above the $31 level, it will face resistance in the $31.45, $31.75 range. A breakthrough above this range could signal further upward movement. Platinum is recovering after a significant pullback and is attempting to stabilize above the support levels of $935, $945. Platinum is showing signs of a rebound, and if it can hold above its support zone, it may continue its recovery toward higher resistance levels. This indicates market optimism for platinum after its recent decline. If platinum successfully holds above the $945 support, it may target the next resistance levels in the $975, $985 range.